What is up, crypto holder? Headlines lately have been ridiculous, full of fear. Traders, investors, everybody, very nervous. The sentiment right now is some of the worst that we've seen in any cycle. But the real macro plumbing behind the scenes says something very different is happening. And it has to do with liquidity. When liquidity sweeps back in, crypto has historically responded by doing something very powerful to the upside. And right now, the Fed's reverse repo facility is nearly empty. And that matters a lot. If you remember just a couple videos ago when I said the business cycle always bottoms before people realize it, this is the liquidity side of that same exact story. Now, I know what you're thinking. If liquidity is rotating, why does crypto still look absolutely terrible? And here's the answer. Liquidity doesn't hit risk assets first. When reverse repo drained, that cash went into Treasuries, T-bills, short-term debt, funding the deficit. That's stage one. We're in the transition right now. Stage two is when that money reaches for yield, pushes further out the risk curve, and flows into equities and crypto. We are not late. We are not at the end of a bull market, in my opinion. We are, as some are starting to say, towards the end of a bear market. We're early. Sentiment is backward looking. The plumbing is forward looking. So in very plain English, I want to explain very quickly what the reverse repo facility is. The Fed's overnight reverse repurchase agreement facility, or reverse repo, is where money market funds, banks, other counterparties park cash overnight with the Fed in exchange for treasuries. It's essentially a cash parking spot used when there's excess liquidity. So when liquidity surges, like during quantitative easing, for instance, lots of cash floats around. Reverse repo acts as a drain valve for that excess, absorbing cash so it doesn't flood everything. This is exactly why during 2020 to 2022 stimulus, reverse repo balances ballooned into the trillions. But when cash is needed elsewhere, when money market funds redirect, when treasuries get issued, when liquidity rotates back into risk assets, that parked cash leaves the reverse repo. It's basically a very big buffer. So reverse repo going to zero doesn't mean tightening. It means the buffer's gone and liquidity is being redistributed. What we need to do now that reverse repo has been drained is we need to go back and look at what happened last time the reverse repo was drained. To put it very simply, there was a liquidity surge that led to a massive crypto boom. If you were here last cycle, you remember. During pandemic stimulus, the Fed's balance sheet exploded. Massive cash injections, money market funds overflowing. Much of that cash went into reverse repo. And as conditions normalized, that cash drained out. Money chased returns. Short-term yields fell. Crypto and equities went crazy. This is the exact template. Liquidity leaves the parking lot and pours into risk assets. Crypto being one of those risk assets that is on the receiving end of that liquidity. And as we know through these cycles, crypto reacts very nicely. So here we are today. Reverse repo is almost empty and macro liquidity is resetting. The Fed's reverse repo facility has largely drained. Reverse repo balances have collapsed toward zero. Analysts say that this marks a new stage of the balance sheet drawdown. The liquidity buffer is fading. Banking system reserves are tightening. Repo market demand is increasing. T-bill issuance remains heavy. Cash is being pulled into the system. And importantly, the Fed signaled quantitative tightening will be ending December 1st, 2025. So what is the implication of this? Like, why does any of this matter for you, a crypto holder? Well, the drain is empty. Liquidity has to go somewhere. With risk assets still under-owned and undervalued, crypto becomes a very prime destination. And this is one reason why I think institutions and big money have had an interest in accumulating crypto at the current valuations. So here's where the dots kind of start getting connected, and it becomes kind of surreal because the Federal Reserve itself is now openly confirming the exact liquidity shift we've been talking about for weeks. Not long ago, on November 7th, Reuters ran this headline: Fed's Williams. Fed may soon need to expand its balance sheet for liquidity needs. This is the president of the New York Fed, arguably the single most important voice on liquidity plumbing, saying the quiet part out loud. Listen to some of these quotes. The Fed may need to rebuild liquidity soon. We may need to grow the balance sheet again. Reserves have moved from somewhat above ample to almost ample. Once reserves reach ample, it's time to begin gradual purchases of assets. Shortening duration is not a monetary policy signal. It's about liquidity needs. This is huge if you're a crypto holder, and most people are not talking about things like this because everything he's describing lines up exactly with the conditions you see when the reverse repo facility drains towards zero. He's basically saying liquidity in the system is tight, the buffer is gone, and the next step is for the Fed to start buying assets again. This is the exact same sequence we saw in late 2019. Quantitative tightening ended, balance sheet expansion began, a liquidity wave ripped through risk assets. And if you've been watching this channel, you remember two things we talked about recently. I told you last week, we just lived through one of the harshest quantitative tightening seasons ever. And now we're shifting into a different liquidity regime. Williams is confirming that shift. And earlier this month, I said, liquidity doesn't announce itself in headlines. It whispers in the plumbing first. Well, this time it is actually announcing itself. And it's doing it right as reverse repo is hitting zero. So put this together. Reverse repo drained, quantitative tightening nearly done, liquidity buffer gone, reserves at almost ample, New York Fed saying balance sheet expansion may need to begin, asset purchases being discussed again. This is what the start of a liquidity rotation looks like. Now, I could be wrong about all of this, but what I do want to do is I want to explain why I think a lot of people could also be wrong right now. Social media everywhere is screaming bear market right now. Macro weakness. This is the top. It's game over. But the plumbing, when you look at it, reverse repo, quantitative tightening endgame, all of the signals, repo pressure, money market flows, what the Fed is saying, it says the opposite. This aligns so nicely with something that I said recently. Liquidity moves first, price moves second. Sentiment moves last. So as we see sentiment on YouTube and X and everybody calling the bear market, let's remember that. And let's see if once again, sentiment moves less. So let's look at this for real though. What could trigger the next leg up? Why could crypto have a pretty powerful move from all of this? Well, with reverse repo gone, money market funds, they lose a risk-free yield option. That's a big deal. Treasury issuance forces cash into the system. Repo volatility pushes capital into assets with real upside potential. And I would just say, as crypto right now is on the receiving end of pro-crypto legislation and altcoin ETFs are being approved and getting ready to be approved, wouldn't you think that crypto and the crypto space is kind of an attractive place for capital? History shows that crypto often reacts very powerfully, even more powerfully than equities during liquidity rotations. See, the problem for crypto for years now has been a lack of liquidity. History shows crypto often reacts way more powerfully than equities during liquidity rotations because it's the most sensitive to liquidity impulses. The problem is we just haven't had any real liquidity impulses. Now, there are risks to all of this, and there are absolutely no guarantees, and I want to explain that too. I'm not a permeable. I'm laying out, and I'm trying to lay out very clearly why I'm so bullish on the crypto space right now, even especially with the dynamics of liquidity and what is happening right now. But let's talk about why we should be careful. If bank reserves fall too far, volatility can get crazy, and I mean crazy. It can get out of hand. Repo market stress could create temporary drawdowns, so that's something to be on the lookout, even on the shorter term. Global macro shocks could slow down the rotation. We saw this last cycle. We had the end of quantitative tightening, and then all of a sudden, we got a global shock. It was called COVID. These things can blindside us out of nowhere. We have to be very careful. But here's the thing. Those risks are part of every liquidity inflection. It's not evidence against it. Now, I've changed the style of my videos lately because I want to be abundantly clear in terms of delivering my bullishness to you. I'm not here to hype prices or call tops and bottoms or tell you to go buy or go sell. That's not what I'm here. I'm trying to be here to provide the data and tools to do those things, but I'm here to show you the data that I'm seeing. And I want to present it to you. And right now, the liquidity plumbing is flashing one of the clearest signals of the cycle. Is it a guarantee? No, it's not. But the overflow drain is empty. That's just data. We just looked at it. And that means liquidity is re-entering markets quietly, invisibly, during all of the fear. History says that crypto reacts very powerfully to that when it happens. And if this plays out, even remotely, like 2020, 2021, the crowd calling for a bear market right now may be walking straight past the setup that they've been waiting years for. So while nobody knows what is going to happen next, this is just the data that I'm tracking. These are just my opinions. I wanted to just share it with you. Please let me know what you think in the comments. Bullish, bearish, it's all good either way. Everybody, I appreciate you watching. Please hit that subscribe, hit that like on the way out if you enjoyed this content, and click the link below for a free trial into our intelligence system if you're a macro investor and you want to plan unemotionally. I appreciate each and every one of you watching. I'll see you in the next video. God bless.